Hi everybody, it's Peter Schiff. It's Friday, October 30th, 2009. Well, the week is over and it was a very volatile week on Wall Street. Today the Dow was down about 250 points. NASDAQ was down 50 points. We reversed yesterday's action. The dollar was strong against the commodity currencies and weak against the yen. The Australian dollar was down about 2%. The Japanese yen was up 2%. Oil prices dropped sharply. Commodity stocks were down. The one interesting thing on the day was the resilience in the price of gold. Early on, gold followed the equity markets lower and the currencies lower. But late in the day, gold recovered, and GLD, which is an ETF, only closed down about $1.50. Gold stocks were still down on the day, but well off their lows, even though regular stocks closed right on the lows of the day. We'll see if this means anything, but I think, looking at it, it certainly shows that gold is very resilient, and there are a lot of buyers in there, more so for gold than there are for equities. But the catalyst for this decline was the bad news, supposed bad news we got on consumer spending. In September, consumer spending dropped for the first month in 5. And this got Wall Street worried that the consumers might stop spending. Well, they have to stop spending. The only reason they've been spending is because they've had stimulus money. What happened in September is that cash for clunkers came to an end, and so Americans stopped buying cars they couldn't afford to get government money. Now, that's a good thing. The bad thing is that we stimulated those purchases in the first place. But the minute the government individuals start to rein in their spending, everybody gets worried. After all, I read this article today that talked about the fact that maybe Americans who are loaded up with debt, who are fearful about losing their jobs, that there's a worry that they might stop spending. Why is that a worry? What I'm worried about is that they'll keep spending. I want them to stop spending. They're loaded up with debt. They might lose their jobs. When you see rain clouds, storm clouds on the horizon, doesn't it make sense to save for a rainy day? That's what we want people to do. But unfortunately, the government and Wall Street wants everybody throwing caution to the wind and just spending, borrowing, so the phony economic expansion can continue. But we don't want it to continue. And the reality is, the longer we keep stimulating the economy, the bigger it's going to contract when we withdraw the stimulus. Now, you might say, well, then let's not withdraw the stimulus. Let's stimulate forever. Well, we can't do that either because we'll destroy the dollar. And then we're going to have an even worse economic collapse than the one that we would have had if we simply didn't stimulate in the first place. That is the catch-22. That is the dilemma. Wall Street keeps talking about when will the government remove the stimulus. And I keep saying, well, they can't remove it unless they're willing to accept the fact that the economy is going to contract. The phony economy is going to contract. Right now it's only expanding because it's on the equivalent of life support. But we don't want to support this phony economy. We actually want to pull the plug. Because the longer we keep the phony economy going, the more painful it's going to be when we eventually have to do the right thing because we can't do the wrong thing indefinitely. Just like if somebody is using drugs, if they want to continue to use drugs because they don't want to come down from their high, they run the risk of overdose and death. And again, the equivalent of overdose of stimulus is death of our currency, is hyperinflation. So we have to. This idea that if they just give us enough stimulus, that then they could, remove the training wheels and the economy can roll on its own, it can't happen. Because this growth that we're getting, or this expansion in GDP that's masquerading as growth, is not legitimate. It's simply spending of borrowed money. It's simply compounding our problem. So it's impossible to withdraw the stimulus and have this kind of phony growth continue. That's what nobody on Wall Street seems to understand. They think if the government just gets the ball rolling, if they get us spending, that they'll withdraw the stimulus and we'll keep spending. Spending what? We're broke. Look at the income data that came out today. Incomes are flat. People don't have any money to spend. For a while, people thought they were rich. They were operating under a delusion. People thought they were real estate millionaires. They thought their house would go up in value in perpetuity. They thought the stock market would always go up. They thought they didn't need any savings. So they spent like crazy. That was the problem. Now people are coming back to reality. They realize that they made a mistake, and now they realize they have to stop spending and start saving. But every time they try to do that, the government tries to convince us to do something different with a dose of stimulus. And that is the stimulus that is going to lead to a bigger disaster. As I've said time and time again, the stimulus is toxic. It is going to kill the economy. The GDP numbers that we got yesterday was not evidence of our economy getting better, but it was proof that our economy is getting sicker. Anyway, that's it for today. Hope we have a better weekend than we had in the stock market. And I will be back again next week with another blog. Again, you know, the contributions are really starting to come in now in the mail and on Schiff for Senate, so it's great to see that. And again, I want to keep promoting the Money Bomb from September 5th. If you haven't heard about it, there's a SchiffSuperbomb.com. Some of my fans are organizing a grassroots money bomb to raise more money for my campaign. Let's see if we can turn that into a pretty big day and raise a lot of money so I can really spread the word about the economy and what needs to be done throughout the state of Connecticut, and have a chance of actually doing that in the Senate of the United States. Anyway, thanks again, everybody. So long.